Coming up on today's episode.
You have to consider about the pocket as well. If you don't consider the pocket, you might lose the chance of buying a good property because there are good pockets and bad pockets in good suburbs.
Yeah.
And there are good and bad pockets in bad suburbs as well.
Hi, I'm Sam from Prime Advocates. I'm the principal buyer's agent and the director. I'm here with Joe for the No Bullshit podcast to explain about how to buy a property.
Dodgy advice and bad decisions can cost you big in real estate. We're here to make sure that doesn't happen. Welcome to the No BS Real Estate Podcast. I'm your host, Joe Agresta, and it's time to take control of your property journey together. Welcome back, everyone, to the No BS Real Estate Podcast, your listening how-to guide to the Aussie finance and real estate market. I'm your host, Joe Agresta. Now, on today's episode, we're talking about what it actually means to buy property properly. Not just scrolling online, falling in love with the photos, trusting the agent's price guide and convincing yourself that this one feels right, because apparently vibes are now a property strategy. So today's episode is built around a real client win. Our guest Sam from Prime Advocates recently helped a client secure a property in Pakenham for $725,000. The current totality valuation estimate comes in at $755,000, which on paper suggests around a $30,000 value difference. But the real story here is not just the $30,000. It's how Sam found the opportunity, how he assessed the suburb, how he looked at the property, the land size, the future potential, the risks and comparable sales, the physical inspection, and how he negotiated the purchase. So today we're going to unpack what made this property worth looking at, what most buyers might have missed, how Sam thinks about value, and how buyers can make better decisions without getting swept under all the emotions that home buying brings. And to help us break that down, Sam, you're here today, founder and principal buyer's agent at Prime Advocates. Sam, welcome to the show.
Thanks for having me.
Of course, I've been so excited because your background, you're tech and software, right? And then you've made the switch into advocacy, and it gives you like a real difference, because you understand the analytics and the data really well, but you're playing in a space where it's very people and emotion based. So I guess the best thing to kind of introduce is, or actually this is the perfect time to introduce our statement for the day. So if you're new on this show, we do a statement called the No BS statement. Basically, I'm going to say something a little bit out there, and by the end of the episode, Sam and I will determine is it bullshit or not. So today's statement is, buying under market value means you've bought well. So we won't answer it yet. We'll come back. But let's see what we end up with, because a property can look cheap for a reason. It might have issues and things like that, but there's things to unpack. So Sam, for people who haven't met you before, how did you get started in property, and tell us a little bit about your story?
Sure. I used to work as a senior software engineer before I get into property. But I built my property in Clyde North about 6 years ago.
Wow.
It was a house and land package which I built, but was built within 4 months during that time. We lived there for like 15 months and then sold it because of the traffic.
Yep.
And we made a profit around $120,000.
Far out from that purchase, because you would have sold in COVID then?
Yeah.
Yeah.
Around COVID.
Good market.
So it was some kind of an eye-opener for me, because if we work for someone and save money, I don't think we can save that amount of money within 15 months. And if both of my wife and myself work. So I thought it's better to look into this, because now I know that it's called phantom money or ghost money.
Yeah.
Because you don't have to do anything to grow that amount.
It's interesting the way you put it, phantom money, like the idea. So that's like the working for someone and just saving blindly kind of thing.
Yeah.
Yeah.
So then I saw an advertisement from BAI, and then I joined the course and finished that and got the licenses. And I worked under different agency for the first few years. During that time, I gained experience, because with that agency, I didn't receive any kind of a support. So I had to do all myself, and I had to make mistakes and learn all these marketing, sales, because I'm coming from a tech background.
It's different.
I had no idea how to do that. But it was a great experience for me. And then I started I got my full license
Hmm.
and worked for like few months as an individual buyer's agent, and then I got my agency license as a prime advocates, and then I could manage to employ 6 other agents under me as well.
Wow.
I'm going to talk to another possible another agent who's going to join
That's
tomorrow.
amazing.
Yeah.
All right. Like and I like that your story, it's like you've come from your own experience, right? It's like, so
Yeah.
you saw the value in purchasing and selling and the equity that you gained. And that kind of inspired you to say, well, what can I do next? It's like, it's an interesting feeling, isn't it? When you have that rush of that first kind of experience where you make money and you're like, this could be a good idea. So BAI, for those that don't know, is the Buyer's Agent Institute. So it's one of the, education courses for advocates to come into the industry. So, and they're quite, prominent and noteworthy. So that's great that you went through, their experience. We've had some buyers advocates on the show before that have gone through that journey, and they're excellent. So, and Sam, I guess you came, like you said, you came from tech and software engineering, like so different to buyers advocacy. How has that shaped the way you assess properties?
Yeah, I used to work with a lot of data and make them easily readable for people who are non-techie. So that was my job. I was doing programming for that. And then in this case, also it comes with a lot of data, but I don't want to give people too much information because they will be overwhelmed with data. So what I'm doing is I'm analyzing data and trying to make it simpler for them and let them understand that this is important when you consider buying a property, especially with suburbs research and then doing property due diligence.
So the property data, I think that's one of the things that overwhelms buyers a lot is when you receive a lot of information and it's all those data points, it's very hard to understand when you don't know what you're looking at, exactly what it means. So part of what I like about your process and what we talked about when we first met was your passion for making sure they understand exactly what they're buying, what the data means. And I think your superpower here is the fact that you have the tech background and understanding, so you can analyze and interpret very differently. Because I think you mentioned that you use the hashtag platform as well. So hashtag, I think, was built by data analysts.
Yeah, I think he has PhD.
Yeah.
So
Insane.
it was a bit learning curve compared with other platforms, but once you get hold into that, I think it's very good.
Yeah, I agree.
And data is very accurate as well. And I think I am one of the few founding members of Hashtag.
No, good on you for staying with them in that journey too, because like I said, for those that don't know Hashtag, it's a system that, a lot of property professionals have access to. So like, us advocates pay for the service, but we try our best to get the most accurate data that we can because we're helping you buy a property. So Sam, like I know that's something you're very passionate about is the accuracy of that information. And when we met, like I said, I noticed that you were very grounded and very spiritual, and we bonded over that because I'm very similar. But you're data-driven. How does that influence the way you guide buyers like that, the way you kind of have your own experience that you've brought into it? Because it's such an emotional process for a lot of people. Like, how do you help them navigate the big emotions?
Yeah, it's especially when it comes to first home buyers and then for some investors as well, because people get attached to the property rather than looking into data or how it works with other financial stuff they are going through and whether it is a matching property for their financial goals. So I'm trying to convince them by showing data and also explaining them in simple terms how this is going to work rather than getting attached to that and paying more than what you have to pay for that property.
100%, because I think a lot of that emotion too, sometimes people get hung up on, like you said, owner-occupiers and investors have a very different mindset when they're investing, right? So with a lot of owner-occupiers, you'll find someone that gets hung up on a very small detail like a coloured wall that's purple. Yeah. And they all of a sudden say, this is a terrible home, I'm not buying it. And it's like, for $50 and a roller at Bunnings, maybe you can fix that problem, but it's a good investment. What's your how do you help those buyers, like especially the owner-occupiers who are listening going, that's me. How do you help them overcome that, those smaller details about a property to look beyond things that can be updated or changed?
Actually, they start very early before that as well, because I had a chat with a first home buyer couple yesterday, and they were thinking of buying a townhouse close to their workplace.
Right.
And they say it's easy for us to go there and work. But I asked the question, are you going to stay in that place for the whole of your life? Are you thinking of a property, maybe a standalone property a little far away that can be purchased with your budget?
Yeah.
And maybe have you thought about rent vesting, so you can rent in the place you want to be close to your workplace, but buy a property and rent it out as an investment property so you can get the equity? Because as all of us know, there is a difference between equity in different kinds of properties. So
Mhm.
for an example, with an apartment, you might not expect the equity growth compared to a standalone house or maybe a townhouse.
Yeah, it's true. It's very different.
And also they think like they are considering other stuff like close to the station, or maybe easier for their parents. They are originally from Sri Lanka.
Right.
So they got the PR about 2-3 weeks ago.
Good on
They
them.
are in a hurry to get their parents into the house. So they were looking for a townhouse which has a bedroom at the ground floor.
It's a challenge.
It's very challenging, and I told them that it's very hard to find those, and if you find, it might be very hard to sell as well.
Yeah.
So those things they consider mostly related to their life. They don't put much attention on long-term growth, and they should consider it as the foundation for their investment property journey. So I told those things, and now they are thinking about that. They will come back to me tomorrow, maybe.
Yeah. It's hard because your role, like it's your role is to help them understand like where they can benefit, right? And where things make sense in the long term. But I think for a lot of and you would probably see this, a lot of home buyers at that very beginning start, they're only looking very short term. They're looking at the right now. What's their situation today? They're not thinking maybe beyond 3 years where circumstances might change.
Yeah.
And if the reality is that their parents don't come here or visit for 5 years because of whatever reason, if they want to move on from that property, was that the best investment opportunity in the end? So it speaks volumes to how you kind of give that perspective, I guess, to those buyers and help them. Because on this show, we have a lot of buyers that ask, oh, yeah, but I've been looking here. No, it's good for right now. And I said, where do you want to be in 5-10 years? It's different. Now it's a different way of approaching it.
And also the funny thing is, it's good that they have found a property having a bedroom
Downstairs,
but it's going for an auction. I told them, you're not going to buy it at the market price. They said that there were a lot of interested buyers. So I told them that it will be definitely going above the market price. So it's better to stay away.
It's hard. It's hard to have those discussions and give a reality. Do you know?
I have seen a lot of auctions that are going way beyond the market price because of the emotional attachment of the buyer, especially the family. If they like the property, they want to bid higher and then get the house somehow. They don't consider about the after effects of buying a house over the market price.
No, and I think there's so much risk attached to auction buying without a professional because it is very emotional. Even, I'm sure, like even for us when we're, like I remember when I was an advocate and I used to go out for an auction, I would even go, I have to be so logical about the stop point, you know, and it is hard because emotionally, even in my brain, I'm excited going, could we do a couple of thousand? Could I slow this auction down? It's hard for us. Imagine that it's yourself being in that position. That's why I'm always like, bring a professional so we know the limit. We know the stop point where it's too much. We see it all the time. These auctions at the moment, they are going, when it's a good property and they've underquoted, they go friggin' crazy.
And I have seen in some cases they have bid maybe more than 100K over the market price.
It's bad.
So after doing that, there can be major two issues they will find after they purchase. Even before purchase, they will see that the bank might not evaluate the property. And they might have to put cash. And also, they might have to wait for a few years until the equity growth comes up because they have already paid for the equity growth for a few years.
It's a big commitment to
Yeah.
purchase. And I always say, I know people have, like, the nation average at the moment is 10.1 months is the average time on market to find a
Yeah.
property. And I think when people get towards that 10-month or close to 12 months,
Yeah.
they start buying anything. They're sick of it. They're just sick of being on the market. And it's the worst time to do that.
Yeah.
It's the worst time you could just make decisions to say, oh, well, I'll bid more. Doesn't matter, because it does matter financially in the
Yeah.
long run.
Yeah.
That means you have to hold the property for a lot longer than maybe you plan to. There's so many factors, or the mortgage becomes a bit too hard to afford, or you have to get a better job to support that mortgage. Too much impact we're playing with. So this is why it's important that you're here.
And also, if they buy it for their principal place of residence, that means they are blocking their future potential to invest on investment properties because of that. If they are using their total capacity and also bidding over the market price, that's something they should really consider.
100%. And, this is such a good segue into what we're here to talk about today, which is, you had this client example you shared with me just yesterday, and I put you under pressure and I said, I want to talk about it. Can we talk about it? And of course, we're going to keep our buyers anonymous, but just more about what you were able to achieve for them. So I'll take one step back. For prime advocates in your process, tell us briefly, who do you help mainly, and what kind of buyers usually come to you? Do you find it's mainly owner-occupiers or investors, or is it a mix?
Actually, it's a mix of investors and owner-occupiers, and sometimes first-home buyers as well. Nowadays, we are helping a lot of investors because there are a lot of interstate investors who are interested in buying in Melbourne. So it's a mixed bag, to be honest.
Yeah. And I guess your specialty, like, do you have a particular niche that you have a soft spot for, or that you like to work with mainly?
Not like that, because at the end of the day, you are helping someone
Hmm.
to secure a property at the best possible price without making a lot of mistakes. So my view is like that. And also I'm thinking of learning a little bit about commercial property and then becoming a commercial buyer's agent as well.
That's awesome. So you can help more. I guess the question to ask here is, I guess, what drives your passion? Like, why did you want to give up? Like, a software engineer is typically a very, good industry, very secure job, rate. What kind of set the passion up for you to do this and say, I need to help more people in the world of home buying?
Yeah, because even myself, I have made few mistakes when I started my property journey.
Yeah.
So I learned few lessons in a bad way. So I wanted to make sure that others will not make that. Others will not do those mistakes, make those mistakes. And also, being a software engineer was not easy because it is a stressful job, even though you are highly paid.
Yeah.
And I wanted to spend more time with my family as well. And also, this job, you are always on the road or speaking with someone, having fun. So I like that. And also helping others to achieve their goals was a very good feeling for me as well. So that was the main reason for this switch.
I love that. I love asking founders that question, because there's always a very big reason why you do what you do, and why you want to help more people. And at the end of the day, it is just to make sure someone doesn't make the same mistakes that you made. I think a lot of advocates out there have come into this industry from the back of an experience. I'm the same. I had a bad experience myself, but helping others as well. I've seen people make mistakes as a real estate agent in my time there. And I just said, people need help.
And also, this industry is filled with a lot of bad guys, to be honest.
Yep.
I can't pinpoint anyone, but that's the basic experience. Even we are thought, when we speak to someone, they are thinking that we are one of them as well.
Yeah.
So I wanted to change that as much as possible and show that there are good guys in the industry as well.
Exactly. And this is exactly why I wanted to have you on the podcast, because we use this podcast as a measure for good professionals. We like to think that we bring anyone that's been on this show, we like to think that you can trust and work with them. That's our whole mission, because I'm sick of the dodginess. I'm sick of the bad guys just as much as you. And I think everyone in the advocacy space is really sick of it. That's partially why we're here, trying to say it's not the same, know. And of course, I always have to say, bad apples exist in every industry, right?
Yeah.
Every industry has dodgy buyer's agents or dodgy real estate agents, but we're advocating for the buyer. So we're not the same as a real estate agent in the sense that we're looking after both parties in one transaction. We're deal makers. We're representing just the buyer. The seller is represented by the real estate agent.
Yeah.
The job is for us to make a deal happen. So it's different. And, before a client actually makes an offer on a property, what does your process usually involve? Like, what are the services that you kind of offer to home buyers when they work with you?
Yeah. So the first thing is we offer them a free 30 minutes initial consultation. So anyone can book through our website.
Nice.
And once they're happy to move forward, in that consultation, we normally check what their goals are, what their current views on buying a property, and we will try to correct some of the mistakes they might try to make, or we will correct some of their thoughts about property and how they think of approaching on buying a property. So those things we are going to discuss, and if they're happy to move forward, we ask them to sign up. And then once they are signed up, we start with the suburbs research, even for first home buyers or owner occupiers, because they might have few suburbs in their mind, but we have to make sure that we show them the best suburb which has the potential to grow. So we share those findings with them, and then they decide on the suburb. Then we start with both off-market and on-market properties. Many people advertise that off-market properties are good and they have the access, but to be honest, it's not always the case. In most cases, most of the off-markets are not in a good condition to start to live in or to rent out. So the buyer has to make a lot of changes like renovations and touch-ups, those things. And also in some cases, those properties are not meant for buyers, and they want to sell for quick money.
Yeah.
But and also they might have higher expectation on price as well.
It's true. So it's like your job is like that support and that nurturing, and you're taking the weight off them.
So we do due diligence for all of those properties, both off market and on market. And then we only inspect those properties if our due diligence passes.
Yeah.
Otherwise, we don't visit that property.
And it makes sense because it's like it hasn't stacked up, it hasn't met the criteria. So there's no point in investing time into that investment.
So I think that process avoids a lot of costly mistakes that normal buyers make.
Yeah.
And after that, we inspect the property and we share a video walkthrough with the client. And also at the end of the inspection, we send them a voice message. We normally communicate with WhatsApp.
Nice.
We send a voice message saying that whether this is good to make an offer or not. And then depending on that, once they're happy with the property, we will arrange an offer and we will negotiate the price with the selling agent and then handle the rest of the process, including connecting conveyancers, building and pest inspectors and property managers.
And I think the important thing to note about the full service is you're getting the right steps from day one, rather than, I think the biggest thing that I see buyers make the mistake on is you start with property first. So you always make the mental decision and say, I want to buy a house. You go to realestate.com. The first step, you should be looking at finance and then assess what professionals exist in this space. Like, get to know who's there. What's a conveyancer? What's a buyer's advocate? You then have to make the choice whether you want to use these people. And a lot of them, like Sam, offer consultations. So get the information, get educated. If it sounds like it's something that you want to entertain, at least you now know and can make the conscious decision. Because where I see buyers make the mistake is after they've made maybe they've got pre-approval, they go to make an offer or they go to an auction, but they haven't done a Section 32 review or a contract review before the auction. They haven't negotiated. They haven't done building and pest. They haven't negotiated terms. And then they get to the auction, they win, and they do all these steps after the fact. This is where a whole heap of monetary problems happen. Funnily enough, today before you came, Sam, when we were waiting, I had a random person who was just looking at the van, and initially I was not sure if we were going to get robbed or what was happening. I walked out of the van and I said, oh, hey, how you going? And introduced myself. And he said, oh, look, he goes, do you do real estate? I said, no, I'm not an agent. I, have the podcast, explained what we're doing. I said, I actually have an advocate coming on today. And he started to tell me his story. He's an investor. And he said, I just recently He goes, I've been on the journey for the last few months. And I felt really sorry for him. So he said, I'm really upset. I took a day off today because of the stress of home buying. And he wanted me to he said, share my story, share the message, but I don't want to be named. So I'm not going to name him. I'll respect that. But what he said was he made an offer on a property. He won the offer, negotiated with the agent. And when he saw the property online, it was listed as a 4-bedroom property. He said he went to the inspection. He said, but you know what it's like. You see 4 or 5 properties in a day. And he said, it said 4 bedrooms. I saw the 4th bedroom when I got to the property. He said, I made the offer, I won, and then I got a conveyancer. This is why I'm bringing this up. He then got the conveyancer after he'd made the offer, after the acceptance. The conveyancer then reviewed that contract and said to him, that's not a 4th bedroom. There's a material fact in the contract that says it's a study. It's just, and there's no door. So he was in the cooling off still. And he said, I have to get out of this contract. So he's attempted to get out, and the agency basically said he's lost his deposit. So the deposit was $2,000 that he made, and he's lost, and they will not give that deposit back. They said, due to wasting time and compensation, but it's only a 3-day cooling off period. So I just thought that was shocking. He's really frustrated, and he's like, I want to go to Consumer Affairs now. He said the agent was really rude. It's misleading. It's misguiding. Why put it as a 4-bedroom when it's not a 4-bedroom? And the valuation was completely different because, as you know, the valuation of the property was done on a 4-bedroom, but in fact it's a 3 with a study.
Yeah.
So I just wanted, he said, share this with that advocate, that I'm happy to talk to him. But what's your take on that situation? Like, this buyer is already very deep in the process. How do you help them?
Yeah. In my case, I would have checked the Section 32 even before making an offer.
Yep.
And also the contract, just to make sure that everything is okay. So normally we use a conveyancer for that. There are conveyancers we are connected with who will review that free of charge. And then even I can read it, I can understand it, I will always pass it to the conveyancer. It's something we have to do, and you have to make sure that it's good to make an offer.
Yeah.
Because there are a lot of things that you might miss, and with advertising, photos, videos, it's crazy. So I'm not quite sure how to help him with that purchase, but if it comes to me, I might help him with initially giving him some understanding of how the process works and what are the most important things you have to consider before making an offer to a property, especially if it is an auction. You have to get all those things done before the auction day. And also if you win the auction, it is unconditional. You can't do anything.
No.
So many people don't know about that.
Well, no, that's right. And like in his case, he's a private offer. So he made the offer with a deposit. Now they're holding that and saying, no.
I'm not quite sure whether it is legal for them to hold it. To be honest, it's a bad experience.
And I felt for him, like he was so open. He said, other people need to be aware that this is happening. He was very passionate, and I just said, you should be getting someone in your corner for investment properties, especially because there's a lot of data that you need to consider. If you haven't thought about it, you need to think about it. But I offered him, our details and said where he does support you, have a conversation before you go too far and make more mistakes. But yeah, I just felt sorry for him because of the situation is that their conveyancer, he even showed me the emails. He showed me his phone. He was very open. He said, look, the conveyancer said, no, we're not giving you a refund. We stand firm. And I said, that's terrible. It's shocking.
But I think he learned his lesson.
Oh, yeah. Yeah, I think so. If he can get out of this contract, he'll move on to a different property. But if he can't, I think he's it's sad to me. Where it hits me personally is this is exactly why the show exists, because I'm so sick of it when I hear these experiences. It's like, doesn't have to happen. It just doesn't. It's avoidable. We're not blaming you guys, the listeners, but get support. Get educated. Just have an understanding of what exists. I'm so passionate about it. Sam is exactly the same. This is why we're talking about it. For the more we talk, the better it is. But for someone like that guy that was here today, I just said, man, you need to talk to someone. You need to talk to an advocate. You need to talk to your broker. Just get support. This is not normal. So you shouldn't do that. So I felt really, really bad for him, which leads me into this Pakenham win that you had, because obviously this is the difference between people getting support and people not getting support.
Yeah.
But Sam, this property, you helped a client secure one in Pakenham for $725,000. Now, the totality valuation estimate came in at $755,000 with an estimated value range of $717,000 to $793,000. So that, for those that don't know, that's the low and the high. And then the middle range was $755,000. The property itself is a 3-bedroom, 1-bathroom, 3-car house, around 824 metres squared. So in a general residential zone, right? And from what you shared, there's also future potential in the backyard to subdivide as well. So whether that's a granny flat or potentially another dwelling, it's subject to council approval. Can you walk us through the basic specs of this property and what made it, what made it stand out as an option?
Yeah, of course. For this client, she was a doctor, and the main reason for the purchase was to get a higher equity option and possibly subdivide in the future. And also she wanted to explore the opportunity of putting a granny flat until the subdivision happens. She can rent it out separately, so her rental yield will be higher. And normally when you are looking for a property like that, you need to have side access as well. This one has around like up to, I think it's roughly around 10 meters side access.
Far out.
Yeah, that's a very big,
That's huge.
big side gate. I think maybe one of the biggest I have ever seen.
Yeah, 10 meters is a lot of...
Yeah, when I inspect the property, I noticed that this is a great opportunity, and you can build a 4-bedder single-story house in the backyard.
Oh my...
Council approval, but I think
it's doable.
Maybe she can build 2 townhouses as well. I don't know.
The value return there is fantastic for what she purchased for.
That was the brief, so we tried to match it.
Yeah.
And I think the outcome was more than what we expected, to be honest.
Far out. I can't believe the potential. Like when I hear subject to approval, of course, but that size of block, is the house on there? Like it's only 3 bedrooms, so it's its own entity. It's a smaller house, obviously, than a bigger one. But the fact that in the way they've planned that land, that's awesome. It's 2 blocks.
Also, it's in a court, so
fantastic location. Okay, so then when you first saw this property, what made you think, I guess the value is obviously from the land and the potential of the land. Was that what drove that kind of, obviously the client brief said she wanted something to put a granny flat or some sort of second dwelling at the back. This would have been a golden opportunity. How long did it take you to find that opportunity from when the buyer started with you to actually finding that?
It was roughly 7 weeks.
Yeah.
She said no to a few other good opportunities as well.
Okay.
During the process, I educated her. And then she decided to purchase that. So there are some buyers who are very picky. Yeah. It's totally understandable.
Of course.
She learned a lot, I think, during the process. And then she decided to purchase this one.
No, I still find like why I ask this question is because the time in market is a big thing for your price range because it changes. As we know, the market shifts. We see it all the time. We see prices that go after 3-4 months, sometimes it's 30,000-40,000 more. And we didn't expect that kind of growth. So when you start buying, and I hear buyers that have been on the market for 10 to 12 months, your market 10 months earlier is completely different, especially where you're wanting to purchase. So the fact that she said in 7 weeks, just in a 7-week period, she said no to like 3 or 4 other good opportunities. But the fact that you were able to find opportunities that meet the brief tells me my message to the buyers listening today is you spending all that time on market is indecision. You're struggling to make that choice, and maybe that's because of a lack of knowledge or a lack of data. It could be a number of reasons. But when you're working with an advocate, they're doing all the analysis for you. They're just presenting a ready opportunity. It just needs your approval to say, yeah, have a look, or no, don't worry about it.
Yeah, it's an opportunity cost for them as well if you wait for a long time.
Yep.
And even this purchase was like an instant equity of $30,000. Of course, different data platforms show different values, but I'm based on totality value.
Yeah.
But as long as you wait, you will lose the chance to buy a good property. And if you pay $600K today, you might end up paying $700 in a year time. And also I have helped a lot of clients now. We purchased few properties in the west side 6-7 months ago, and now it has grown about 60,000. So if you
Well
waited for
done.
6-7 months to buy a property, you might have lost 60,000-70,000, maybe more than that.
But this is the thing, like when we talk about this stuff, it's not us plucking numbers from the air. This is just the data that exists. Like
Yeah.
we track properties. So for this client, now that she's purchased with you, you're probably going to give her an update in a few months about the position of that home, like how it is performing 3 months after, 6 months after, 12 months after, 2 years later, however long she decides to hold. The whole idea behind working with an advocate is it's not just the service at the time to buy a property, it's the after service as well and the follow-up that, hey, your asset's grown. You've got probably equity of 200,000 after 1-2 years. Do you want to do something?
Yeah.
And especially if she can add value to the property. Like you said, she's purchased with you and instantly gained 30,000 in equity from that acquisition cost, right?
Yeah.
But now if she decides to develop and sell that property again with a site or, townhouses, granny flat, if that's what she decides to do, she's instantly put way more value on that purchase now because it would be completely different.
Yeah, also it's very important you start with the suburb research because every suburb doesn't perform.
Well, this is the perfect segue, right? Because I want to give everyone like a landscape of this market. So when we look at Pakenham, it had 4.7% 5-year average annual growth. So that means like on average over the last 5 years, it's grown 4.7%. So it's been trending up, not down. The rental yield for the suburb is 4% or 4.03%. So that's like the yield above what they can get on their, every week rent. The median asking rent per week is $590. And in the Pakenham market, there's been 450 sales over 12 months, which is quite good. And the average days on market is 31 days.
Yeah.
So that's the landscape. There's more going on here than just a nice block and decent price, right? What were you looking at for the suburb level before deciding Pakenham made sense for this person?
Yeah, so we started the client's budget and the goals. Depending on that, then we look for warm spots filtered by hashtag.
Yeah.
And normally warm spot is something that will become a hotspot in 4 to 5 years.
Yep.
It has the potential. We can't guarantee, but it has the potential to become a hotspot. So once it becomes a hotspot, it goes over 10% growth minimum, and it might last for a few years. So normally when you're looking for a warm spot, you have to look for days on market and of course affordability as well.
Yeah.
And socioeconomic conditions. Then stock on market and council approvals for new projects. We normally consider those things, and units to house ratio as well.
True. Yep.
And also the demand for number of bedroom houses. For an example, if you are going to buy a property with 3 bedroom, if the demand is 4 bedroom, then it's not going to work. Like it will grow, but it will not grow like a 4 bedroom house.
Yeah.
So you have to consider those things as well. So if the client's budget is covering for 3 bedroom, we have to find a suburb which has the potential to grow with a 3 bedroom house comparably, rather than going for 4 bedroom. So those are the things, basics things we consider, but normally the system checks for, like, if I am correct, it's checking around 200 plus data points aggregated into the system we check.
Yep.
And then we simplify it for our clients, and we normally expose around 20 points of data.
Which I think to have all that research in one place, right? It's suburb holds a lot of weight, And did this client want to buy in Pakenham when they started with you, or were they?
No, so we started actually Australia wide, and then then we filtered data, and also even if you find a good warm spot, there are still things that like you have to consider about the pocket as well. If you don't consider the pocket, you might lose the chance of buying a good property, because there are good pockets and bad pockets in good suburbs.
Yep.
And there are good and bad pockets in bad suburbs as well. So you have to check that.
And that's part of what you do. Like there's so many, ways we find this information or we get this information. Usually it's via subscription, right? We always have a lot of data at our fingertips. We need to know it.
And pay a lot of money as well.
Always. We want all the data is the point, right? So part of like when you're using, when you're working with an advocate is they're getting access and they're paying for the subscriptions to data that typically you're not maybe going to invest in yourself, and even if you did, you'd need to learn how to interpret it because the data is not explained. The data is just, here's the data point, good luck. If you know what you're looking at, great. If you don't, you have to do research. So it makes a big difference. And I think, how do you decide whether a suburb has enough demand, rental appeal and long-term potential to be worth buying in, like these warm spots, like you said?
Yeah, basically those things I mentioned previously, you have to check the demand, supply. So obviously supply should be far low compared to demand.
Yep.
And it should be an established suburb because if you buy in new suburbs, there are a lot of stocks.
There's heaps of stock.
Yeah. So you won't get the required capital growth in a short time if you buy in those suburbs. And also the socioeconomic conditions, because if you have lower socioeconomic conditions, there's a chance that the market will go up and down very quickly depending on a small economic change.
Yeah.
So you have to consider that as well. And also, of course, new project approvals, you have to consider those.
Yeah, of course.
And also unit to house ratio, because if there are a lot of units, that means there are a lot of renters and maybe people who just buy and sell within a short time.
So high turnover.
Yeah. The next point is the hold period as well.
Yes.
You want to create more demand and low supply. So for that, you have to have a very high holding period as well.
Far out.
So we consider those things using hashtag.
Yeah, it's like it's fundamental to the process. And, when you were assessing this opportunity, were there any risks, compromises or limitations with that house that buyers would need to understand before getting excited about all the potential?
Yeah, so basically it's mainly because of it's an old house.
Yeah.
There can be termite damages, structural issues. So that's why we always make sure that we put the condition of subject to building and pest inspection. And then once the offer is accepted, we arrange a building and pest inspector for the client. So they will do the inspection. Around this area, I work with a very reputed building and pest inspector who gives his, I think, 100% to the inspection, put all into the report.
Yeah.
So we can see whether there are any issues. So every time when he completes the inspection and calls me, I ask the question, will you buy this house?
Interesting.
So most of the time he say yes, in some cases no. So,
but it's good because you've got that relationship.
Yeah.
You can just ask honestly and say, you've now inspected the bones.
Yeah.
Would you buy it?
Yeah.
When he says no, does that drive your decision to say, okay?
Yeah, then we will consider, and depending on the client's requirement, if he's planning to demolition, then I might not consider it too much.
Yeah, but if they were considering to live in or to invest, then
something else. We might ask the conveyancer to negotiate the price or fix that issue.
Yeah.
So the client is okay with it.
No, it makes complete sense. And I guess looking at the valuations and negotiation side, because this is the point, right? That $30,000 saving. Now, we know it was purchased at $725. Totality estimate came in at $755. Now, I was looking at, I guess there's a guide that the agent would have advertised. So what was the agent's asking price for that property?
It was, I think, now I couldn't find it yesterday.
No, because they take it off.
Yeah. I think it was around 700 to 790 maybe.
All right. It's a big range, right?
Yeah.
And looking at that, I think it's important for buyers to understand because, one tool can give you one number, right? But another tool can give you a different range completely. And that doesn't mean that you just pick one you like and say that's the one. Yeah. It's, you got to understand that it's a guide, not the goal. So when different valuation tools give slightly different answers, how do you think buyers should interpret that, or how do you help them kind of say, it's okay, or what do you trust? And then how do you know what the agent's putting out there is correct?
Yeah. So normally in our process, we check for multiple tools.
Yeah.
And also we do our own manual comparative market analysis for recently sold properties. We are comparing apple to apple, and depending on that, we try to get a median value. And also, we have seen very crazy statement of information from real estate agents explaining the price they have put. Like, I don't know, in some cases, they are not comparing apple to apple. I have seen statements where they are advertising the property of a 3-bedroom, but they have put 4-bedroom houses to compare. I don't know how they do that.
It actually just pisses me off, can I tell
Yeah.
you? When I see those statements of information and I look at the comparables, like all you have to do is just look up the address. They're so different. I'm like, how are you justifying this property? That's a unit and we're selling a house, or that's a
Yeah.
house and this is a unit. What are we doing?
And they're comparing some properties like that have been renovated, fully renovated,
Yep.
with a very bad condition property.
No, it's bad. I think it's something that's buyer beware. I always say it on this show. Look at this statement of information and just Google those properties and compare like for like. Is it the same bedroom, same bathroom, same property type and the land size? And then look at the condition.
And especially in the buyer's market, sometimes they advertise very old, like properties sold maybe 8-10 months ago.
Yep. It's always old data. There's so many things. And, how did you assess whether, because you went in, was your first offer the 725 or did you go in with less, or how did you kind of get to the negotiation?
Normally we anchor the price at a lower price.
Yeah.
Over their minimum range.
Yep.
So we started with 695.
Oh, shit. Yep.
And then negotiated up to 725 because it was a little bit different case as well. It was a deceased estate, and I think there were like 3 or 4 parties who wanted to sell.
My God.
Who got the property from the inheritance.
Yeah.
So they were making different decisions. I think one person maybe wanted to sell at a lower price, but 2 others didn't want.
Yeah.
That's what I heard from the agent. So in a negotiation, it's not like winning our side only, because it should be both parties winning. So we had to consider those factors. We made the deal so that we settle the property in a quick time. So they were attracted to that.
Yeah, because I think this is the other thing. It's not always just the price that you're negotiating with, it's
Yeah.
the terms.
Yeah.
And in this case, do you think the terms were what convinced them a little bit more?
Yeah, of course. And also we provided the finance, what is called?
Approval?
I mean a confirmation letter from the bank and also from the mortgage broker.
Oh, that's just saying that they're...
Yeah.
That,
And I think she offered 20% deposit.
yeah, that's very attractive.
Yeah.
And a
those are
short
very
settlement.
Yeah, 20 days settlement.
That's even at a lower price point, you'd have to think about that as a vendor.
Yeah. And also, if you can do, I normally don't advise, but if you can do unconditional, that's the best option. But yeah.
Yeah, I thank you for sharing that so transparently, right? Because it's a lot of the time what I think people misunderstand is, the buyer's advocate's there to get the cheapest deal possible, but it's not. It's to make the deal work, because everyone has to win at the end of the day. And still, market value being at that, the cost estimate being where it was, 725 compared to the high end, especially where the agent also valued the property up to 790. It's a great saving, and it's a job well done to you for winning that for your customers, especially the type of property you got, 10 meters of of access point, and subject to, approval. It's a great asset to secure, especially for that brief that you explained. So well done.
Thank you.
Of course. I guess one thing, I want to wrap up before we finish here, Sam. I can't believe how quickly the time has gone. Sometimes I get caught in the conversation and then I go, oh, shit, I didn't ask you some questions. So I think before we go, one thing I want to ask is, how much weight should buyers give future potential when deciding whether a property is good for them or not?
It's very important, because if you are a first home buyer, it's your foundation of the property journey. So you have to make sure you get it right, or you might get stuck with a bad property and then you will suffer for the lifetime, especially if you are buying apartments.
I think we need to have Sam back to unpack apartments as an investment, because not many of us like them.
So If you are thinking of generating more wealth through property, you have to consider equity growth.
Yeah.
Maybe 90% of the thoughts should come through that. And then
100%.
if you are focusing on that, you have to know that the land appreciates, the property depreciates after 20 years. So it's very important. You have to make sure that it's considered. If you are looking for lifestyle choices, then yeah, it's a different story.
Oh, completely.
Yeah.
And I think that makes sense. Like, and on that property that we just talked about, like, if this property didn't have that future potential for the granny flat or the second dwelling, would you still consider it a good purchase?
Yeah, I think so, because normally in the due diligence process, we check whether this is possible to subdivide, and we normally call the council and check with them as well.
Yeah.
And also we check Google Maps. So if you see few houses subdivided close by, I think it's a good indication that this can be subdivided. Of course, you have to check the section 32
Yeah.
contract, because there can be some conditions added
To the
regarding
land.
subdivision. So that's why we check it with the conveyancer before we start making an offer.
Yeah, makes sense, because sometimes there's an easement or there's a covenant, something very random that you didn't even know, and now all of a sudden, yeah, there's potential, but you can't do it for X amount of years.
Or heritage zones.
Oh, heritage zones are a killer for that.
Yep.
So no, it makes sense. I guess, moving into the final thoughts from you, Sam, thank you so much for being on the show and sharing your expertise with us. I've really enjoyed the conversation and the way you approach property with your customers. So before we go, for first home buyers or owner occupiers or investors that are listening today, what's the biggest lesson that you want them to learn from this episode?
It's very important to do your due diligence and research even before thinking of a property. And also you have to get an understanding about your financial capacity by approaching a mortgage broker. Otherwise, you are not doing what you should be doing, and you will make a lot of mistakes. So if you want to avoid those, it's better to learn those things and understand how the property game works. If you don't have time, call us.
It's true. And, for you guys, we've got Sam's details on screen and on the show notes below. So he offers a free consultation. There's no obligation. I always say it's free to have a chat. Just pick up the phone. It may change your mind. It may not. You might learn something. But take the step to get educated and understand what you're about to invest in, whether that's for your own home or an investment property. And Sam, if someone is starting their property search now, if someone's sitting here on realestate.com late at night, every night, they have been for a while, what are the first 3 things they should do before they make an offer, minimum?
Ideally, you should start with the suburb. But if you have a fixed suburb that you definitely want to live there, then you have to consider about the pockets as well. There are good pockets and bad pockets. So you have to identify those pockets. Second thing is, when you are checking a property, you have to do a full due diligence on the property. There can be a lot of mistakes you can make without those. And down the line, you will have to spend a lot of money to fix those mistakes as well. And you might end up with paying a lot of money to parties to fix those issues. So it's very important. Third thing is, you have to get the contract and the section 32 reviewed by your conveyancer before making an offer. And also you have to make sure that you are making a good offer rather than emotional based offer.
Yep. No, solid advice and solid 3 tips, because I think there's a few people listening that are like, yes, I've been scrolling. I am planning to go to an inspection or an auction this weekend. So we hope that you actually hear this before you make that mistake. But Sam, before we wrap up, we've got our no BS verdict at the start. We read a statement, and to remind everyone, the statement today was buying under market value means you've bought well. After everything we've spoken about today, Sam, do you think that's bullshit or not bullshit?
It's not bullshit.
Yeah.
But you have to do your work.
Yep. Got to do your research and back it up.
Yeah.
No, I love it. Well, that is, I guess, today's key takeaway from the episode. Buying well is not just about finding something, below a valuation estimate. It's about understanding the full picture, the data, the property, the suburb, like the pockets of that suburb. There's so much to consider. And if it all seems like a challenge, Sam's details are on screen and in our show notes below. pick up the phone, have a chat. It might change your mind. It might give you that guidance and the next step. So, Sam, I'm so happy you came today. Thank you so much for being here and sharing all that knowledge and wisdom. It's honestly, I've really enjoyed the conversation with you. So thank you again.
Thanks, and thanks for having me and inviting me for this wonderful podcast.
Thank you. I appreciate that. It's all about getting the message and education out there at the end of the day. So the more professionals we talk to, the more people we talk to, it builds that buyer beware that I'm so passionate about, that you're so passionate about. So thank you again. And for everyone who tunes in all the time, we really appreciate your support, your listenership and dedication. We're starting a Reddit community that is coming up in the next week. So stay tuned. We'll share an email with all of our listeners to go on that community where you can connect with some of our guests. You can get some tips, some, tools, just things you need for the journey. We want to support you. We believe that everyone has a good opportunity to buy a house, but you should do it with the right tools in place. So thank you everyone for tuning in as always. I'm Jo Agresta and this has been the No BS Real Estate Podcast. We'll catch you next time. That's a wrap for this episode of the No BS Real Estate Podcast, powered by Abodi AI. If you found this conversation helpful, don't forget to subscribe, leave a review, and share this episode with someone who might need it. If you're looking for more guidance on your home buying journey, you can visit www.abodi.com.au for expert advice, property insights, and the tools you need to find the right home with confidence. If you're already on your journey, you can also download our app. Just search Abodi AI on the App Store or Google Play. Have any questions or want to connect, you can follow us on Instagram at abodi.com.au or send us a message. We'd love to hear from you. Thanks for tuning in and we'll catch you in the next episode.